Welcome back to the deep dive. Today, we're doing things a bit differently. We're skipping the prepared remarks, heading straight into the Q&A from Zillow's Q3 2025 earnings call.
Exactly. We're jumping right into how leadership fielded those tough questions, about strategy, competition, growth targets.
Yeah, the real back and forth. Our mission today is really to distill what came out of those analyst conversations.
That's right. And the big theme seems to be how Zillow keeps outperforming this housing market that, well, even they say is just bouncing along the bottom.
Right.
It really boils down to, I think, two main things they kept hitting on: product innovation and some pretty serious cost discipline that's enabling their whole vertical integration play.
Okay, let's unpack this then. Starting with tech AI. Zillow's making moves, integrating into things like ChatGPT, first real estate app in there. How are they thinking about that? Is it a risk, being sort of an external doorway, or is it really this pure opportunity they described?
Well, their framing is definitely pure opportunity. They see it as entirely additive, not something that replaces their core app.
Additive, like previous shifts? Mobile search, maybe?
Exactly like that. They draw direct parallels. Their view is that getting in early on Gen AI is crucial, and it leverages the strength of their brand.
Okay, the brand is strong, no doubt, but, brand didn't save iBuying, did it?
Fair point.
So what's the evidence this time? How do they ensure they don't just become, data fodder if ChatGPT becomes the main entry point for users?
Right, that's the million-dollar question, isn't it? They first point to the fact that they're incredibly fortunate, their words, that around 80% of their traffic is brand direct. That's a huge base.
Okay, so direct traffic is the moat.
That's part of it. But the deeper argument is about the transaction itself. Real estate is messy.
Go on.
It's regulated, it takes a long time, it's emotional, huge assets involved. Their core belief is you need a bespoke, native, vertical experience for the actual doing part.
So you might find the house via AI.
Exactly. But you're not getting your mortgage approved or handling closing docs inside a chatbot, right?
Makes sense. So the strategy is AI inside Zillow, not Zillow inside AI, fundamentally.
Precisely. Gen AI for them is about, two things: better tools for consumers, doing research on Zillow, and making agents more productive. Think AI features in Follow Up Boss, their agent software.
Okay, empowering the existing ecosystem. Got it.
Making it stickier, not driving users away.
All right, moving from tech risk, let's talk regulatory risk, that external noise they mentioned. The FTC case on rental syndication, industry mergers. What's Zillow's actual defense on that FTC rentals thing, partnering with Redfin and Realtor.com?
Yeah, they tackle that head on. They frame those partnerships as fundamentally pro-consumer and pro-property manager.
How so?
They argue it increases choice and efficiency. They use data points like renters on Redfin now seeing triple the listings. And they claim property managers rank them #1 for ROI satisfaction. So they say it's actually pro-competitive.
Interesting angle. Arguing broader access is good for everyone. What about the other noise? Potential big brokerage mergers. Compass and Anywhere were mentioned.
On that, leadership sounded, less concerned about direct impact on their business. They don't see material risk there.
It's always a but.
But they did raise a flag about the industry risk of hidden listings, the idea that agents might keep listings off the open internet.
Pocket listings or network exclusive.
Exactly. Zillow's whole model relies on open, fair, transparent access, so they strongly advocate against anything that hides inventory. They believe sellers ultimately want max exposure, which plays to Zillow's strength.
Okay, fair enough. So that's the defense. Now let's follow the money. The for sale engine looked really strong in Q3.
It really did.
Total revenue up 16% year over year. First sale up 10%. That's what, 500 basis points faster than the overall housing market?
A full 5 percentage points faster. It's a huge gap. And it really underscores that vertical integration strategy working in their enhanced markets.
So they're succeeding in moving beyond just leads.
Absolutely. They're converting that massive top-of-funnel traffic into actual transaction revenue, which has much better margins. It's about closing the loop.
Walk us through that formula again, the execution pieces.
Sure. 3 core parts. First, expanding enhanced markets. That's where the full integrated experience happens. They hit 34% of connections there in Q3, up from 27% last quarter.
And the goal is?
Long-term goal is 75%.
So still a lot of room to run.
Okay, piece 1, geography. Piece 2.
Integrated services within those markets. Zillow Home Loans is the big one. Origination volume jumped 57% year over year in Q3, and they specifically called out double-digit adoption within enhanced markets. They're capturing more of the transaction value.
Right, cross-selling into their own mortgage arm.
Yeah.
And the third piece, Must be the product itself.
Exactly. Making the listing compelling. That's Showcase, their premium listing product. Adoption hit 3.2% of all new listings,
Which is?
more than double where it was a year ago. And they keep adding features. AI virtual staging, this thing called Sky, using drones and AI for 3D models. Constant iteration. Okay, so enhanced markets, home loans adoption, and Showcase listings. That's the engine.
That's the core for sale engine right now.
Now, you mentioned something new, Zillow Pro. They also have Zillow Preferred. How does Pro fit in? Is it replacing Preferred?
Good question. No, it's not a replacement. Think of Pro as the feeder system, the gateway.
Okay.
Zillow Pro is a paid membership. It bundles software like Follow Up Boss and branding tools. But here's the key difference. Pro helps agents serve all their clients, their entire sphere, not just Zillow leads.
So it's broader. It's a sauce play for the agent's whole business.
Precisely. It expands Zillow's addressable market significantly by providing value beyond just lead gen.
And how does it connect to Preferred?
So the top performers using Zillow Pro become eligible for the invite-only Zillow Preferred program. That's the integrated pay-at-closing model that drives the big revenue opportunity they talk about, that potential $1 billion incremental.
I see. Pro builds the base, trains the agents on their tools.
Exactly. And the best get invited to the high-value Preferred program. They were clear, though, Pro's revenue contribution in 2026 will be modest. It's about adoption first.
Got it. One more thing on buyers before we move on. Buyability. We heard that term a lot. How are they using that?
Right. Buyability. It's their tool to help shoppers figure out affordability. Enrollment jumped significantly, hit 2.9 million people, up from 2 million just last quarter.
Okay, but relevance for Zillow's strategy.
It's about creating high-intent, pre-vetted buyers. When someone uses buyability, they're signaling strong intent, and Zillow can then channel them directly into Zillow Home Loans and connect them with preferred agents.
Tightening that funnel.
Exactly. More vertical control, higher capture rate.
Okay, let's switch gears to rentals. That seemed like the real standout this quarter. Huge growth.
Yeah, massive acceleration. 41% year-over-year revenue growth in Q3. Just phenomenal.
What's driving that?
It's really a two-pronged strategy firing on all cylinders. First is just scale building the biggest marketplace. They cited 2.5 million active listings, almost 70,000 multifamily properties. Just huge inventory.
Okay, scale on one side.
And the other side is modernizing the experience. Things like cost transparency tools, a single online application renters can use across listings, and that Isuzu partnership for credit reporting based on rent payments, making it easier and better for renters.
And those controversial syndication deals with Redfin and Realtor.com we talked about earlier, how did they factor into that 41% growth?
Well, despite the legal noise, Zillow says those deals are adding real business value now. The expanded reach brings in incremental customers, more eyeballs on listings, which then convinces the big property managers, the multifamily clients, that Zillow delivers the audience. So they upgrade to higher-tier advertising packages. Zillow gets more wallet share.
So the wider net justifies higher ad spend from property managers.
That's the dynamic. And it's what's giving them confidence in hitting that billion-dollar-plus annual rentals revenue opportunity that they keep mentioning.
Okay, impressive growth across the board, really. So what does this all mean financially? Let's look at the foundation supporting this. Cost discipline.
Yeah, this was a key takeaway from the Q&A, I think, the operational leverage. Total revenue grew 16%, right? But total fixed costs only grew 5%.
Wow, okay. Big difference.
Huge difference. That means revenue is growing much, much faster than the fixed cost base, which directly leads to margin expansion. EBITDA margin was up over 200 basis points.
And just translate that margin expansion for us. Plain English.
It means they're making significantly more profit for every dollar they spend on running the business, the platform, the engineers, the core marketing. It shows the model is becoming more efficient as it scales.
And crucially, it lets them fund all this expansion, even with the housing market being sluggish.
Exactly. They don't need a booming market to improve profitability right now.
So what's the outlook? Are they finally betting on a recovery?
Nope. Still cautious. Their planning assumption for 2026 is that the macro housing market continues to, quote, bounce along the bottom.
Okay, planning for flat, but growth expectations.
Still strong. They guided for Q4 total revenue growth of 16–18% year over year. And rentals, they expect to accelerate even further to more than 45% year over year growth. Just incredible numbers for rentals.
And looking into 2026.
They expect similar growth and EBITDA margin expansion, to what they've seen in the last couple of years. Again, assuming no help from the macro market, it's all driven by their own execution, their product playbook.
That paints a really clear picture. Focus internally, expand margins, grab share, don't wait for the market tide to lift all boats. Thanks for breaking down that Q&A strategy.
My pleasure. It's quite a story they're telling.
And maybe one final thought for you, our listener, to chew on.
Go for it.
Well, the expert just laid out how Zillow sees a path to $1 billion in incremental for sale revenue just by rolling out their current enhanced markets and preferred agent playbook wider.
Even in a flat housing market.
Right. So the provocative question is, if they can achieve that kind of growth and hit their targets in this environment, what happens if the housing market actually does normalize or recover? How much higher could those mid-cycle targets, the $5 billion revenue, 45% EBITDA margin, potentially go?
That's the question investors are likely asking. That's the upside leverage.
Definitely something to think about. If you want to explore concepts like buyability or Zillow Pro further, check out the links in our show notes. Thanks for joining us for the deep dive.